What up, guys? Welcome back to RT2CC Comic Club. Justin here, and a 2-day recap for November 13th and 14th. So we did some trades on the 13th. We sold a covered call. That was it. So we made $63.34. Guaranteed income, so I love that. We also bought a Tesla call, so it expires June of next year, 2020. $400 strike, which after their earnings, I'm totally fine with that. I'm keeping that one. Totally confident that Tesla will hit that. I think they'll hit $400 this year, to be honest. You can quote me on that probably by the end of the year, most likely. Depends on, well, we'll talk about it. Depends on stuff that I'll talk about later. But anyways, I also want to point out that when I sold that Apple covered call, it was trading at $193.01 a share at the time. And so I picked a 205 strike. I felt pretty confident about it. So I wanted to take a little bit more profit. Again, this was a 2-week. This expired, a week after that. So I saved the fee by not selling one every week. This was a recommendation by Sabu Share, who's a YouTube subscriber of mine. So shout out to him again. He recommended going every other week to kind of save those fees, because every time you do a trade, you pay a fee. So instead of doing every week, I'm doing every other week. That way I save a fee every time. So I'm utilizing that strategy now. But we'll see what happens with that. So going into the stocks did not great, and it was green though after 10 o'clock. Then it started going red again. It was just kind of all over the place. So some stocks did well on this day. Tesla did fine. Nvidia, Netflix, Universal Display, even though Universal Display is pretty low. This interesting article I saw was talking about how important Apple is and how much influence they have in the market. So if you look at this chart here, if you look at the Apple stock, which is in blue, compared to the S&P 500 index in red, you can see how closely tied they were. So I thought that was kind of interesting. I don't think that's a coincidence at all. I think Apple is just it's one of the biggest companies on the planet. Very, very influential. So let's just go to our winners. And again, brace yourselves. We lose a lot of money. This is not as bad as the video prior to this, but it's a lot. So if you keep in mind what we lost last time and then add it to this, it gets pretty bad. So looking at our winners, we had Tesla, Nvidia, and Tesla again. So we had good winners there, but we still lost money overall because our losers, I guess there was a lot of them. I guess it eked out. I don't know. The math doesn't always add up to me. I don't know why, and I'll talk about that in a minute. Let's just go into the next day because I want to keep it moving. The Dow started well, and here's where I decided I wanted to switch taking screenshots instead of the Apple app. I started doing it of the TD Ameritrade app, so you'll notice it changes. So, so the watch list is now different. What I try to do is I put my most heavily weighted positions on top. So like Apple, Tesla, Canopy Growth, I have the most money in those, and Amazon, so I put those at the top of my list. So that way you can kind of see in order of importance. And so I wanted to do it that way. And so, the stocks were mostly red, everything going crap. But we did have some winners at the end of the day. So we had like Align Technologies, Roku, Alcoa, Micron, and JD finished in the red, or green, sorry. And then there's their percentages. And yeah, I'm sorry, I forgot to mention the other stuff. So Shopify also finished up. Tesla also finished up. And Domino's Pizza. And yeah, but it wasn't like amazing gains. It was just solid. But a lot of losers. And so let's go into our winners and losers. And here we lost even more money, about almost $8,000. We had Tesla, AMD, our AT&T stock was our top three, which is kind of rare for the stock to be up there in the top three because you don't make as much owning stocks as you do options. But anyways, with our losers, we had quite a bit of them. Canopy Growth was our biggest loser. We lost over $1,000 on 3 positions. So that sucked. And then Amazon, we lost a lot there. Now, I did the math, and all my losers added up to negative $11,554. My winners only added up to $948, which means I really lost $10,605. And so I'm not sure why the balance was only showing $7,700 less. I'm not sure if maybe it was after hours. Maybe some stocks are going up after hours because I did take the screenshot at 10 o'clock at night, which is definitely possible. But again, I don't always know how the numbers add up, and it kind of is frustrating. I'm used to the math checking out, very precisely, but it just doesn't when everything's open all the time. But I know option prices can't move after hours, so I don't really understand 100% why that's happening. So if any of you guys are really, really knowledgeable and know why this is going on, or if you notice this happen to your account, please comment below, share your experience, because I would like to know. So anyways, let's just get to talking about Tesla. So I'm going to just preface this by saying I never looked at Tesla's balance sheets ever. Like this time right now is the first time I've ever done that. And I just never had to, because again, like, if you ignore all the noise, this is why my investing philosophy, I only ask myself 2 questions. And I mentioned this in other videos before, even in the way beginning of my vlog. I ask myself 2 questions when I want to invest in a stock. Are they a dope company? Are they doing dope shit? If it's yes to both, I invest in them, because that's really all you need to know in the grand scheme of things. Tesla, this is the first time I've looked at their balance sheet, honestly, ever. And I started investing in them 7 years ago. And their stock was at $29 a share 7 years ago. And they're at over $300 now. So clearly they're doing something right. And I didn't need to look at a balance sheet to know that. Okay, it was like, just look at what they're doing. Like, you don't need to be a rocket science. You don't need to be an accountant. You don't have to have a CPA, or, is that what it is? I think, yeah. You don't need to be like a certified accountant. You don't need to have a degree. You just go with your instinct. And that's just my personal, I'm not a financial advisor, but I'm not telling you to buy companies based on what I'm talking about. That's just how I do it. And it's worked so far. I started with 16 grand in 2012, and I'm up to, well, you'll see what I'm up to now, but I'm still up. I'm up a lot. So like, it's just, a lot of people like to act like they know everything, and they're going to tell you how to invest your money. And at the end of the day, you have to do what you feel is right. And if you want to look at the balance sheet because you're curious, like, that's honestly why I'm doing it now. I'm just curious to see what the numbers are, but I really don't care, because all I care about is, are they still in business? Are they still making money? Are they still growing? Yes, they are. And I don't need to see a balance sheet to know that. I can just read headlines. I can just, listen to Elon talk. So anyways, let's talk about the earnings, because I think there were some very, very positive things. And I was surprised that the stock went down right afterwards, but let's just go into it. So I'll just mention a few things. I want to put a couple charts on there to show you. I think it paints a good picture of how well Tesla's doing. Let's keep in mind that Tesla was not making much profit at all prior to this, prior to the last quarter earnings, the one that was reported before yesterday. So the fact that they reported 2 profitable quarters in a row, like Elon said they would, I think that's phenomenal in and of itself. Okay, so I'm going to post the balance sheet here, or the condensed consolidated statements of operations. Okay, so you can see that. Now, if you look at that first column, the December 31st, 2018, the 3 months ended, under total revenues, they reported $7.23 billion in total revenues. That's for 3 months, guys. That's a lot of freaking money to make in 3 months, okay? Not many companies can pull that kind of revenue. So that one is amazing. That's number one. Number 2, look at it where it compared a year ago. $3.28 billion or $3.29 billion a year ago in the last quarter. So that's a 119% increase, okay? 119% increase, okay? So let's go back to the balance sheet. Now, if you go down, they have a net income. That's not a loss. It's a profit, okay? If you subtract the net income attributable to non-controlling interest, whatever the crap that means, they made net income $139 million. That's still a lot of money, okay? That's a lot of money. And so a lot of people look at how it is. Earnings per share came out to 78 cents, but they lost $4. And if you go 2 columns to the right, they lost $4.01 per share a year ago. So we're talking about a company who lost a lot of money, $675 million in 3 months last year, to making $139 million. Okay, so I think we need to just kind of calm down and just look and see that they're doing okay. They're growing. Companies don't make money on day one. They lose a lot of money because all the upfront costs they do, and then they start to grow. They start to learn. They iterate, and they improve. And so I think that's what Tesla is doing. Okay, and so one of the things that they mentioned is they're hoping to deliver 360,000 to 400,000 vehicles in the year of 2019, which represents a 45% to 65% growth compared to 2018. I think that's just fine. I would have been happy with 30%, to be honest. And so I think that is good. they're still growing. They also mentioned that their operating income in Q4 remained stable at $414 million. I'm going to show some charts now, so let's just go back to the screen here. I want to show you some interesting charts that they pointed out. Look at this one, premium vehicle sales in the US. Model 3, huge. They're clearly at the top of that list. They're outselling all their competitors. Phenomenal. Let's go to another chart here. EV sales in the US. If I'm going too fast, just pause it. But if you can see those third quarter 2018 and fourth quarter 2018, huge increase, a huge spike. And let's just be real. That was because of the Model 3. It wasn't because of the Bolt. It wasn't because of the Leaf. It was because of Tesla Model 3, okay? And so that is a phenomenal chart. I don't know how you can argue that that's not a phenomenal chart. It clearly is. Now, if you go on that other chart, let's see, I'm kind of reading this. It says percentage of Model 3 trade-ins. Okay, so a lot of people are trading in, subcompact cars that are non-premium. And I fall into that left category. No, I think it was midsize. I fall in the one right next to it, the midsize, because I traded in a Honda Civic hybrid, which I believe would fall under midsize. And a lot of people are trading in non-electric cars. You can see here, the only red little part of this graph, only some people traded in probably Model S's. Those are the full-size sedans. So some people are trading in Model S's, probably old ones, to get the new Model 3. And everything else, just ICE cars, okay? So that's another graph that paints a really good picture for Tesla. And I mean, there's other graphs. I'll link in the description for this. This is ir.tesla.com if you want to read the full report. It's really not that long. I thought it would be it'd take me 5 hours to read. It didn't take that long at all to read. And so, yeah, I want to finish by just saying Elon Musk mentioned that advanced summon should be available next month. Again, that's dope, okay? And they're going to be unveiling the Tesla freaking pickup. They might be. He didn't say for sure, but he was leaning towards it that they might unveil that this summer, and that's dope. Again, do we even need to keep talking? So let's just and I wanted to talk about the operating cash flow. I'm going to leave the video at this because I think I'm rambling at this point. But operating cash flow, a lot of people look at operating cash flow because they talk about, I looked up on Investopedia what exactly it means. It says operating cash flow is a measure of the amount of cash generated by a company's normal business operations. Operating cash flow indicates whether a company can generate sufficient positive cash flow to maintain and grow its operations, or if it may require external financing and capital expansion. That's what a lot of people are focusing on with Tesla. Do they need to keep borrowing money, or can they generate enough cash? Let me see if I have enough storage on my phone to keep going. Okay, so the phone I thought crashed, and I lost that entire 15 minutes of footage. Thankfully, it showed up randomly, so that was weird. But anyways, what I was saying was, with the cash flow with Tesla, and I talked about this in another video, how I think, Tesla was trying to do take a lot of proactive steps to kind of help their company do better in the sense of making the stock go up. Of course, you can't purposely manipulate your stock, right? But they can take actions to make the stock go up if they want. I mean, for example, they ended the referral program a month early. I feel why would they do that? Why? I think they really wanted to save money now to and if people were seeing that they wanted to save money now, that would, create a positive sentiment about the stock, which would make the price go up. And I think it's just a theory, okay? I'm not saying I'm right. So let's just, not get too defensive about it. I'm just saying, I think Tesla doesn't really want to pay that $920 million, debt that they have. It's a convertible debt. They can convert half of it to shares. I think that's what they're trying to do, just because in a lot of the argument on the other side is they can easily pay it back. They're generating cash. Yeah, I get it. They're generating cash, but I forget what their cash flow was for last quarter, but I don't think it was $1 billion. And so if, let's say I really apologize that I don't know this number. I'll try to put it on the screen if I can find it with their free cash that they generated. I want to say it was $700 million or something. It was in the hundreds of millions, but it wasn't as high as 900, I believe. And so if you were to let's say you spent 3 months of the year generating $700 million cash, let's say, but then you had to pay back 900 million of it, that just sets you back like 3 or 4 months. That takes away 3 or 4 months of time that you, like hard work that you guys put into that company. They work so hard day in and day out generating this cash. I don't think they just want to just be like, oh, okay, well, we're going to take away 4 months of our life to pay this loan. If they can have some sort of influence, I'm just saying, if they could have some sort of influence where they can take some proactive steps as a company to secure themselves financially and be in a better spot, yeah, the natural side effect is the stock will go up. And that's because they're doing more responsible things with their money. And I think that's what they're trying to do. That's just my personal opinion. I could be wrong, but I think that's what they're trying to do, because they would much rather pay back half of that $920 and issue the rest in stock, as opposed to giving $920 million, because it still is a lot of money for them. Yes, they have the money. I get it. I can do math, okay? I know that they have more cash than what they owe. I know they're generating cash right now, but they're not Apple. They don't have $237 billion in cash sitting around, where $900 million is like a tip to the bartender for them. This is a big chunk for Tesla, and I don't think they just want to give that away if they don't have to. But again, that's just my opinion. I could be wrong. It's not a big deal either way, because I'm still a Tesla bull. I still love Tesla. I just want them to be in the best spot as they can. And I think the more cash they have, the quicker they can expand and start those other projects. Maybe giving $1 billion away might set them back 3 or 4 months on the Tesla Semi. Who knows? I don't work at Tesla. None of the other Tesla tubers that I know works at Tesla, so they don't really know what's going on as much as Elon Musk does. And so that's just my point. So I'm going to leave it at that. If you agree, cool. If you don't, that's awesome. I don't care. As long as you still like Tesla and don't badmouth them like a lot of shorts do, because I think they invest in the company to do bad and then they start spreading FUD, and then I don't think that's cool at all. But yeah, full disclosure, I obviously own Tesla, so I'll just put that out there. You guys knew that already. But anyways, if you like this video, it's a long one, I apologize. Hit that like button and subscribe if you haven't already. And I'm gonna get some more videos. I'm feeling better now. I'm getting back into a rhythm. I had to upload a lot of footage from December and January, and I was doing a lot of that back end work. So I should start pumping them out again. So thanks for staying with me, and we'll see you guys tomorrow.